Welcome back. This is the Alchemist Nation Podcast. My name is Walter Morello, and I get to hang out with some of the coolest people across the country who are real estate investors who have built their empires and just are looking to give back. So, Kenny Wolfe, you're a syndicator, you're a family man, you're a good friend, a good person, and you know how to have a good conversation at midnight. I remember meeting you in Boston. So, Kenny, how you're working on a ton of projects, right? You bought a Rockefeller building in Cleveland, from what I remember, and Darina tells me you've taken down two more deals, 100-unit plus. So let's start there, right?
Yeah. So we've been pretty busy in 2020. Well, first, thanks for having me on, Walter. I appreciate it. Good to see you again. I did enjoy our late Boston conversation there in March before all this happened.
You were literally the last national traveler I got to hang out with before everything got cut down.
Well, good. I hope it was the best for last. So
it was phenomenal training. I learned a lot, and then just hanging out with you afterwards, you gave so much.
So all right, well, good. So 2020 has been pretty good for us. We've been pretty busy. We've bought 42 million of multifamily assets this year, and we've got another 25 million in the pipeline, either under contract or close to it. So we've been pretty busy. Some of those are going to probably close early next year at this point, but we're late in the season. But I've been doing that. We just launched our commercial real estate fund, our third one of that too. So we buy triple net stuff as well. So we're very busy around here at the office. So much so I had to actually hire a guy in March. I don't know who hired anybody in March, but I did.
Yeah. So you're still building the economy, even though the economy is like, yeah, I just want to tank right now. You're like, nah, let's bring this back in, keep it growing. That's Kenny, right. You've done a lot. You've done a lot in your lifetime, but you've done a lot just in this last year. How'd you get into real estate? Like, what was it before you were the man, the myth, the legend? Like, what was early Kenny Wolfe? Like, how did you say, you know what, I want real estate, I'm going to do it this way?
Well, it's funny. So I got out of Baylor University, graduated from there, got out of oil and gas job in the accounting field. So I was, one of those people, entry-level accountant, and kind of worked my way pretty quickly in that organization. So I was CFO at 28 years old on a spin-off company we did there in Shreveport. So anyways, did that. And then 3 years into that, we had one client. It was Chesapeake Energy. The first time they went bankrupt was 3 years into our 5-year contract with them, or we're about to. And so my wife and I just like, hey, look, we got to find something else, because my dad was in oil and gas, and then my grandfather also was in that as well. And so I've seen it's either feast or famine in that business. It's exciting, but sometimes that's a bad thing.
They say that about investments. If you get excited about the investment, it's probably not the one. You should walk away.
Right. Yeah. Keep a level head. And so anyway, I reached out to a family friend. She was very wealthy family. So I'm big on modeling. So if someone's doing what you want to do, ask them how they did it, and then copy it. It really shortens the learning curve for everybody. So not just investing, but working out, whatever you want in life, right? So anyways, did that. She said, hey, go to this 2-day real estate seminar. So we did that. The first day, they talk about single family investing. And so my wife and I were so excited that night. Our goal plan was to buy 10 single family homes in Dallas, Fort Worth. Super pumped. And then the second day they talk about multifamily. And it was just, it was a light bulb went off. So we said, forget single family altogether. We had the means to jump into multifamily. So that's what we did. So we did two passive investments to learn the ropes, one fixer upper, one yield play. And then the third deal we did was our own syndication of 76 units.
Wow. And what year was this? How long ago was this when you first got started?
2010. So almost, we've been in the game about 10 years now. So
nice. And you suggest people follow that path of start with investing in somebody else's play, go passive, learn the process, learn the ropes, and then you can start doing your own.
Yeah, absolutely. I think it's a better way to go on that. And because, my goal was always to build a business, right? So I wanted to build something pretty big. And so, and I was coming from oil and gas and accounting. So numbers really was good for multifamily. That really, translates to real estate, to multifamily real estate in particular. But I had no idea about operations. Like I had no idea how to operate these things. Like well, and I still don't know how to evict anybody. We have got people who do that, but I wanted to learn the ropes of how do you actually operate these things? I had to build the team on to actually operate these things well.
Yeah. You know what, Kenny, I think as personal experience, knowing how to do evictions, knowing how to fix things has actually slowed me down. Right. So I talk about 60 units the way you talk about 6,000 units. So it's, I think honestly, just knowing that all you have to do is be able to identify the right people to manage is where your strength is, where you came into it. And you've always had hustle, right? You can't deny it. You've always had hustle. You may not have come from money or a big opportunity, but what you built by the time you were 28 was somebody who can move up in companies. You identified, you learned, you modeled. And the fact that you're able to model somebody who's already successful, a friend, and you utilized that instead of saying, oh, they're successful and ignoring or distancing from them, you said, how do I get closer and learn? That made a big difference for you.
Oh, absolutely. I mean, I'm so grateful I had that, I picked up the phone and reached out to her and grateful she suggested that 2-day event and the rest is history. So
it's amazing. I'm sure you sat there with a pen, took all the notes, Googled half the stuff later on.
Yeah, absolutely. It was a whole bunch of pad
I love it. So syndication is it's definitely, there's a lot of people who do it wrong. There's a lot of people who do it well. There's a few people who do it right, and I don't want to say that there's a lot of people who do it right, but there's a few people who do it wrong. And so you've been going around the country teaching people how to actually evaluate the numbers, how to look at a deal and say, yes, this is something, because you got to learn how to passively invest before you go and start running these things. Watching a good investor, being involved in a good investor's program, like the numbers you taught us, I've never looked at a spreadsheet of that size, right? I've bought the max I've ever bought was a 24 unit building, and the spreadsheet wasn't like that. There wasn't, I didn't have to worry about the managers. We put our own management in place. How did you learn it yourself? How did you learn the ropes on this?
So I was I'm a graduate from 2 guru groups. I'm an alumni. So I'm a free agent, been a free agent for 5 years. But I mean, those really help. And to me, most of it, I mean, education, yes. But to me, the biggest plus of those groups is I didn't have the network to raise $1 million my first deal. In that kind of setting, I've seen it done many times. So to me was a great tool to use to be able to raise money your first time, in your first, second, or third probably as well. But eventually, they box you into a certain flavor, and I just don't do that. So,
Right.
So I don't do well with that.
So when you say they box you in to a certain flavor, what does that mean when it comes to coaching and gurus and those rooms?
So they're very like they a lot of the times they focus on B and C class multifamily, which is great. I love that. We've done a lot of it. We're still going to do a lot more of it. But my goal was to build a broader real estate investment company where we do triple net, hard money lending, and development. That was the 4 things I wanted to do, and now we're doing all of those 4. But they kind of box you in, and so if you can't if you can't abide by the rules, and if you say, oh, I'm doing this development deal, they'll get a little upset.
I love it. It's a lot like Dave Ramsey, right? So Dave Ramsey is a phenomenal training. I don't know if you're familiar with him, the Full Money Makeover. So phenomenal if you have no money, right? It's a great place to start and, basic. But if you go on his forums and you try to give people a little advice on leverage or, God forbid, syndication,
yeah, no way, man.
They'll eat you alive. It's like, no, this is the only way you could possibly do it. That box is too small. You've outgrown the box. It's time to go.
I mean, he's very good at getting everybody back to zero.
Yes.
So if you want to be a zero and stay there, then go with Dave Ramsey.
Right. And like there's people who need to be at zero. Like they're negative, and so it's positive, but you're right. Like if you want to be at zero, Dave Ramsey. And
right.
Grant Cardone is you want to excel and get to that next level. He's going to push you. Rod Cleef, Kenny Wolfe, like you guys are having this conversation on a different level.
All right. Yeah, I appreciate it, man. Yeah, it's exciting. I love investing. I've always wanted to be a full-time investor. And so I get to do what I love every day.
Yeah. And so development is kind of new for you. I knew this is something you always wanted to do. You want to talk a little bit about that project? You've already raised capital, so there's no issues with the SEC. So that project in the Rockefeller building, it's just a fascinating project.
Yeah, I mean, it's a beautiful building. So it's a historic building in downtown Cleveland. It's got the word Rockefeller right across the top of it, big white. It's actually deed restricted. You can't take it down.
That's awesome.
So
very cool. Rockefeller.
Very Rockefeller. So it was, built 1905. It was always been office building. It's 50% occupied today. We're going to convert the vast majority to multifamily units, A-class, downtown. And one of the cooler things was that after we put the deal under contract, Sherwin-Williams announced their brand new global headquarters going literally across the street in 2 massive parking lots. I mean, the timing couldn't have been better. So we took down the asset, and Sherwin-Williams, they're supposed to move into their $1 million square foot space in what they say 2024, which it'll be about a 3-year build. So they're still building coming up here in a few months, and then ours is going too. I mean, it's exciting, and it's a lot of cool history stuff. I mean, there's 36 of Rockefeller safes, walk-in safes on the 17th floor. I mean, it's unreal. George Steinbrenner had his office there in Cleveland in the Rockefeller.
Wow.
It's so cool, man. And we think there's a ghost on 14. But anyway,
awesome.
It's a whole other story.
That's awesome. It's funny because I remember hearing this project before you're taking it down. You'd already lined up, you knew where you're doing it, and you're raising the capital just to do the renovations, or maybe you had just taken it down, but now you're doing the final raise, and you were talking about $100 million building.
Right. Yeah, absolutely. I mean, I think it'll be end up down to maybe about 120.
120
evaluation, because it's. I mean, we've got a vendor out of Chicago. They run food halls across the country. Well, we've already talked to them. They want to take down the full bottom floor plus some of the basement, 20,000 square feet. I mean, so people are really excited about it on the tenant side as well. The city is super excited because the same owner owned it for 52 years. You managed to own a building for 52 years.
Wow.
Anyways, that's amazing to me. So he's and he did okay with it. He didn't bring it back to like its real glory like we're gonna do, but anyways, it's a great location. It's an awesome property, and just to have be able to be a part of that historic building in downtown is pretty cool.
Yeah, it's just a cool project. And I remember when you first mentioned it to me, I thought about it and I said, man, I have no idea how he's going to do this. But as you started to communicate the numbers, I realized it was just sticker shock, right? Like what we suffer from the people who buy the 2 families, 3 families, and then the people who buy in 200-300 units, it's sticker shock. Like at the end of the day, it's the same process. And you're just looking into the future. You have to look into the future a little bit further and say, you know what, 5-10 years from now, this is going to be a good place to be. And Sherwin-Williams was kind of that stamp that said, yes, you've done the right choice.
Right. So, yeah, absolutely.
And you can't always see it, but by moving in the right direction, doing all the research you do, how many deals do you take down a year? It's not a ton, right?
I mean, we'll do 6 this year. I mean, I know one year, I think 2018 was only 2. So we're pretty picky on what we do. This year's been really busy. We've been getting a lot of off-market stuff, like first crack at it this year and a little bit of last year. So it's nice to be able to see that kind of stuff. But it keeps us busy. So, but I mean, it just depends on the year. I'm fortunate. I don't have to buy another deal in my life.
Yeah.
So this is for fun and for build something bigger and better for everybody involved. And so at this point, the investors and everybody, but that's really kind of why we do what we do. But again, yeah, we just focus on the properties that make sense. And if they don't, you got to be able to pass them too. That's a good sign of an investor, is like, you don't have to buy everything, right? There's deals where people try to put a, round peg in a square hole, and that it's usually a disaster. So
yeah, if the strategy doesn't work with the location, or the location doesn't work with the building, you can't put them in the wrong place just because, hey, I learned how to flip single families, but now I'm in the multifamily market. Doesn't necessarily work. So, So Kenny, you mentioned something. You're building. You don't have to buy anymore. You do it for fun. And the other piece is that you're doing 1 to 6 deals, but then you mentioned that you're getting these things off market. Why do you think it has increased this year? Is it because you've just done more talks, you've been more influential, or do you think the market has had a little bit of a benefit for the multifamily side?
I mean, I think in multifamily, especially, like, you're playing, I don't want to say the big leagues, but whatever. We'll just call it that. We'll call it what it is. But
there isn't a bigger league, so it must be.
I guess we're the big leagues, but I try to stay humble. But the big leagues, and so that so it really matters who can close. And so in a pandemic, who do they really think can close a deal? And we've closed every single deal we've put under contract. And so by having that kind of reputation, and also not retrading on a deal after we get under contract,
right.
then I think that goes a long way with the brokers. Plus, I mean, brokers were hungry. There wasn't a lot of stuff coming to market on 2020, and so these guys were that's their livelihood. And so you just reach out to them and say, hey, I'm looking for this. Go find it. And man, it's amazing. We've had a lot more success on help on the buy side from brokers this year than ever, just because it was slow for them. So.
Yeah, I find that brokers, when they're commercial, not small commercial, but large enough commercial, they actually become worthy real estate agents. But everything below that grade, it's like I could just go to a wholesaler and probably get my deal faster, or I'll probably be faster for me to call the owner themselves, right? And like I'm a licensed agent, so I can say that, right?
Okay, good. Yeah, I didn't say that.
No, that wasn't you. That was you just your eyes told the story. So it's fascinating, right? The broker's been working. So I don't know if you know Charles Dobbins, but he was a syndication coach out of Boston.
Okay.
And so we hired him a while back. Phenomenal guy, great coach. And he says honestly, the brokers are where your deals come from. Right. I know that's counterintuitive for the small guys, but once you get to that certain size, they truly are.
Even the off-market stuff. I mean, yeah. I've done in all 10 years, I've done one true seller to buyer direct transaction over 10 years. So all the rest, like I said, even if they're off market, they're through a broker.
Right. So. Yeah. At that level, you want somebody else looking at everything. You want somebody else running it, building, setting up all the appointments. It makes sense to bring the brokers in. So it's exciting because we get to move towards a better space. Kenny, this is more of a personal, since I've got you here, I'm going to get you, drag you in a coaching session for me. I've convinced Dorena to move to Tampa with me for the winter. Cause we're looking at the Tampa market. I'd like to do my first, 50 units, 100 units down there. What do you think about DFW and Tampa?
I'll pick on DFW first. I think DFW is fine. I mean, it's a great market. We just bought an A-class deal here in June, right like 200 yards from the lake. I mean, it's a beautiful asset. Nice. That's something else that the gurus don't teach you, is that you can go to A-class. So anyway, you have to know how to do it, and structure it right, but you can make the numbers work. But anyways, I digress. DFW,
it's very exciting to me, by the way.
I know I could talk real estate all day. I get excited about it. But we sold a C-class deal in DFW in January for like 90 a door, 92 a door. I mean, it was insane. It had a chiller on it. It's got a lot of, it was definitely a C-class deal for 92. We're building this 88 unit deal that we're doing now for like 115 a door. In town. And so to me right now, the play in DFW is either one of two things, either building brand new because you're getting a slightly higher basis, but you got a brand new product. And then, or two, we've seen some of these A-class deals work out because the interest rates are so low. And then if you're able to structure your debt the right way, get a little bit a higher leverage, then like this last one, we got 84% leverage on an A-class deal, right? So if you get that leverage on an A-class deal and the interest rate was 2.96 locked for 10 years. I mean, if you do that kind of stuff, you can trade up to the A-class today. Now, 3 years ago, no way, it wouldn't have made sense because they were still paying 5.5 cap rates, but the interest rates were 4.5. So you got a 1% spread. Well, we're below 3%, and I'm buying them for 5.5. Well, okay, now all of a sudden they make sense, so trade up when you can.
Exactly. Like it actually makes sense right now to go to A-class. The lenders are more comfortable with it. They'll give you those low interest rates.
Right. Yeah. So we're looking at another historical building in downtown Dallas right now. Probably take that down. I think we'll get that one pretty easy. But anyways, so that's what I think, Dallas. And then also too, we're looking at 2 other office conversion deals to multifamily in downtown Dallas right now.
Switching them out. Yep.
So working on those in Dallas. B and C class. I don't know. I saw a group put out a investment offering and their total return was 70% on a B class deal over 5 years. I don't know. We just don't do that kind of stuff. It's just not our cup of tea. So we want to double their money in 5 years or less. And if we can't, then we pass. So anyway, and then Tampa, I went out there probably 5 years ago now to check it out. And it was just as hot as Dallas. But the demographics are awesome. you're protected from hurricanes for the most part. So you're fine there. But I mean, I think it's demographic wise, it's a great place to be. I think I think you're gonna have some competition, but there's competition everywhere, except for us in Cleveland. We're buying all of it. Don't tell anybody. But
no, don't tell anybody.
yeah, don't tell anybody. But other than that, I mean, there's competition everywhere. I just got outbid in El Paso on a deal. Whisper price was 10 million, and to be in the best and final, you had to be at 10.5.
Wow.
$500,000 over the whisper price just to get best and final. That's insane. Yeah. And then in East Texas, Longview, a B-class deal, I was outbid by $350K on the whole deal, which is just, I mean, it's crazy. So there's definitely a lot of demand to buy multifamily still. Right. And I think it's only going to increase because there's still some people on the sidelines. But I mean, we get cold calls all the time for our existing multifamily stuff for folks to buy. A lot of out of New York zip codes. I mean, a lot of New York City zip codes are calling us, but on our deals, but which I don't blame them. But anyways, I digress again.
No, it makes sense, Kenny, because New York's making the money, right? You got New York, and I'm sure you're getting them from LA or San Diego, and they're calling in saying, "Hey, look, I want to get in the game. I can't buy where I am, but all the stuff you've got makes sense."
Right, and that's the thing. Like I mean, if you had to worry about not getting your rent frozen for a year, or whatever they're doing up here in New York City, I mean, how do you make that work? You know, so
we're going through that in Boston right now. So
I don't know how y'all do it.
It's fortunately we own enough where they cover each other. It's like an insurance policy, right. But if you don't own enough, you could definitely get taken out in this. Like if you own a 3-family in Boston, you paid $1 million for, and all it takes is one tenant to not pay for a year, you're fucked. Like it's game over and you're in trouble.
I don't know, man. Yeah, that's unreal. So we focused on like the landlord friendly states, and so I think we're seeing more and more outside investors come in to those markets. And I think we'll see more of that. There with the Fed promising low interest rates for the next 2 years. I mean, it's going to fuel multifamily, real estate in general, but definitely multifamily. Because like I said, I mean, this deal we're looking at A-class. I mean, it's a historic building. I can buy it at a 5.5 and at a 2.8% interest rate. We're going to cash flow like 8.5, 9% on a like prime location in downtown Dallas with, I don't know, it's just phenomenal. So, anyways, so you can make these deals work, and I think you're just going to see more and more competition for them.
Yeah, I absolutely agree. Kenny, the way you look at it is you don't need every deal, and so that's why you look at it really intelligently. You're just looking and saying, "Hey, look, I want to do another deal because I enjoy doing the deal, but I don't have to do this one." You're doing it. Everybody grows as you continue and expand. Where do you see yourself going over the next 5 years? Where do you see your company growing, your partnerships? What is your goal?
So if you haven't checked it out, the book Traction is absolutely amazing. It's good. So we set our big 10-year goal at 2029 is to have $1 billion of real estate under management. Nice. So that's really the big goal. So we've got kind of broken down to 3-year goals and year goal, all that kind of stuff. Anyways, if you haven't read the book and you're a business owner, go buy it today. It's phenomenal. But that's it. $1 billion of real estate under management. And honestly, with Rockefeller and some of these other bigger projects we're doing, I think we're going to hit that a lot faster. So I need to read my goal.
I think so. So that's $1 billion asset value. I think that you will hit that. You're on a trajectory that will blow that past. I think that setting the 10 years makes it a safe number. But I think that you're absolutely right. Like you have that trajectory, you're on track to do it. And it's fascinating to watch you because that was Grant Cardone's figure when he started, it was 10,000 units or $1 billion, one of those. And he's hit it now. And it's amazing to watch, the titans of this can do it. It's just staying focused.
Right. That, and also the cool thing about multifamily, it's so scalable. That was a huge draw for me because of the non-recourse lending. I mean, you could take this as big as you want it, you're capped on single family to somewhat, right? On that. And so the lending side, it frees you up. It's so scalable because the lending, but two, also the day-to-day management of the properties is run by, we have awesome on-site folks at all of our properties, and they take care of our asset, and and I take them out to lunch.
It's an even trade.
Anyway, exactly. So, but it's really cool. And then also, by investing this way, you're also creating jobs on obviously our on-site folks, but also all the rehab we do, where so it's pretty cool to be that part of it too, is to be someone who's helping move the economy forward and not just trading paper on the stock market.
Well, it's like you said, you got a 50-year-old owner. The owner was there for 50 years, but had half vacancy. And so you're going in there and repurposing the building, increasing the occupancy and revitalizing the city. So the city officials see the value, but you're the new people who have a new place to live, updated, and the functionality of being right there in the building with all that stuff you have at the bottom. It's fantastic.
Oh yeah, it's so awesome to be able to give back to the community like that too. So we were already we've been thanked multiple times on multiple projects by the police departments across
yeah, I'm sure
about having a lot fewer calls.
Yeah. It's a point of pride, but in the beginning, everybody makes fun of you for picking that building up, and it's like, don't you worry, I'm gonna turn it around.
Exactly. Our first acquisition in Cleveland was a mid-rise C- deal, and I thought
I've never heard somebody say that.
When I toured it, I thought it was more of a C. But then the week after we bought it, one of the city council members drove up and she goes, "I'm so glad you guys bought the asset. Can I bring the drug dogs through?" And I was like, "Oh my gosh, what the heck?
What do you mean?
What do we do here?" I mean, you could smell pot, but I didn't think it was that bad.
Right.
Blocking the unit, but anyways, they actually ended up not having to come through. But we turned that property around. I mean, it's much better now. Amazon, we have like loads of Amazon employees now there, so it's really the actual culture in the building has changed and really improved it for everybody there. And the city loves it too. So it's it's cool to be a part of.
It's awesome, man. Kenny, so have you ever read the book Big Shifts Ahead? It's a real estate investor book, talks about the future of real estate.
I have not. I need to. I'll write that down.
So you might like, I mean, you follow it anyway. Like you're investing in the South, you're investing in multifamily, you're moving in a lot of the right directions, and your information on DFW and Tampa, like it's so in line with the book. They wrote it 5 years ago, and basically they're a real estate evaluation company. They evaluate the entire market, and they did it 5 years ago, and they're saying this is what it's going to look like over the next 10 years. And so your evaluations gave us a good snapshot. The book is called Big Shifts Ahead. Okay. If you're interested, it's a great book. They have an Audible as well. And I learned a lot, and this conversation has solidified a lot of that information from somebody who's actually in the ground, doing it in the trenches. So really valuable conversation so far, Kenny.
Good, man. Good. Yeah, I'm glad to be here.
I got to ask you, because I ask everybody, and we're about to wrap up, so I know you got other things you got to do, but I got to ask you the 3 pieces of advice. If you could go back, actually, before I ask this question, selfish, where do you think the economy is going over the next 5 years? Multifamily, do you think we're going towards more of affordable housing, or do you think luxury is going to hold its ground? What do you think is probably the right structure to be in over the next 5-10 years?
Well, one, hard assets. Inflation is going to be absolutely insane because they've already pumped in about twice what they did for 08 and 09 into the economy. And then it sounds like everybody's on board for doubling that. So I mean, your dollar is going to go a lot less farther. So that means rents are going to go up, valuations are going to pop. So I mean, I'm telling folks, buy hard assets, whether it's with me or whoever, gold or I don't like precious metals myself, but I like stuff that cash flows. But hard assets are really, in general, going to do very well. Paper is going to be, not worth very much, in my opinion, over the next 5 years, I'd say. So that being said, I think multifamily is probably one of the best hard assets to buy, and not because I'm biased, but because you can buy a big enough building, rents are going to keep going up. Obviously, your expenses are probably going to go up somewhat as well, but they're not building any more B and C class asset stuff anymore. You can't afford to build it that cheap. But then the caveat is the only way I think affordable plays a big piece is if you're in maybe California or New York or Massachusetts, like places like that they kind of lean that way or really lean that way. I think that could probably be a play there. But again, as an investor, you want to stack the chips in your favor. So if I got to pay a mortgage, then they for sure have to pay us rent. So that's fair, in my opinion. So anyways, that to me, I think if you're, if you're in the fairway, I think for the most part, you're gonna see, valuations go up, rents are going to skyrocket. I think multifamily is a very good place to be. Obviously, we'll see here in a few weeks who wins, but a big piece to why we do what we do is the tax shield. And so if that'll be, we'll see what happens with that. So we're all kind of watching with that, but still, people have to have a place to live. And more and more single family homes are being outpriced, from starter homes. I mean, the starter home now in Dallas-Fort Worth is a townhome, if you can believe it. I mean, it's which is crazy. Who would have thought us with so much land, the starter home is a townhome, so anyway, so you're seeing it here in Dallas-Fort Worth, and really all over Texas for the most part, but you're just going to see growth and not building as much. You can't build affordable housing unless you subsidize it somehow, some way, and that's going to have its limits too. So that means you're going to have more and more folks packing in just less and less units.
Yeah. And I think that I do see that as one of the pieces, and they mentioned that in Big Shifts Ahead, is people are moving from the colder states into the warmer states, out from California into the more affordable states. There's a shift. There's a lot going on. And what you said is how people can protect themselves and prepare themselves is have hard assets, have things like cash flow, multifamilies for sure, even if you're starting small, but eventually want to get to the bigger stuff. Learn the ropes, get somebody like Kenny to teach you the process. Even if you have to invest in one of his deals or somebody else's deals, that is probably the easiest way to get yourself started. So Ken, before we let you get back to buying half the world, what is 3 pieces of advice? You go back to young Ken, a young 20-year-old Kenny, and say, hey, these are the 3 pieces of advice so you can build your empire faster, be happier, live a little better. What 3 pieces would you give somebody at 20 years old?
Right. So I actually get asked by a lot of 20-year-olds now, which is funny. I feel like an old man now. So anyway,
don't be both. Don't shave your head. It makes you look older.
Okay, I'll do that. So I'd say, the biggest piece is go big or go home. If you have to start with single family and trade up, but if you're able to figure out how to, and I say figure out, because that's what it is. You just got to figure out how to come up with $1 million. If you don't have it, then you got to go raise it. And then you got to go down the rabbit hole. Okay, well, how do I raise it? Well, you talk to an SEC attorney, make sure you do it the right way. Because you don't want bad to happen. But you network like all get out to get there. So go big or go home. And I'm trying not to do too long, but one quick story on that is that, our first syndication was 76 units, but it was part of our portfolio of, the other one is 32 units. But that seller did not want to sell me my 76 unit deal until the 32 unit closed. So think about that. He did not want to get stuck with a 32 unit deal. There's some wisdom in there. That's a whole nother podcast, bud. So we'll do that later. But
hey, I'm down for it.
Yeah. That same guy who bought the 32 unit, I think he's done 400 units today over 10 years. And we've done 4,700 right by now. And not bashing him at all, but just saying the trajectory is phenomenal. When you can afford a third party management company to take care of all the day-to-day stuff, you can focus on building a portfolio. You can move so much faster over the same amount of time as if you started out with the small ones and worked your way up. And you can do that. I've seen a lot of folks do some really cool things by doing that, but it takes them 30, 40 years to get there. And who has that time?
100%. Who has that time?
Right. So that was a long one. Go big or go home.
Yep.
2 would be, make sure whatever real estate you're getting into is scalable. Because you've got to be able to grow it from 0 to 1,000, 2,000, 3,000. And I guess the third one would be don't limit yourself on belief. I think a lot of the times we get in our own way. We hear I can't do that. When it was so funny. So when how Rockefeller came about is I was being driven home, driven to the airport from Cleveland. We passed a warehouse, and I just threw out to Augustino up there, my buddy and partner up there in Cleveland. I said, hey, there's a warehouse. I go, man, I'd love to buy one of those and turn it into multifamily. He goes, really? He goes, all Cleveland's like that. I'll find something. So anyway, so I fly up like 2-3 weeks later. He goes, hey, I got this deal for you to go, look at. So we're driving up, and he says, yeah, it's the Rockefeller building. And I'm like, what do you mean Rockefeller building? And we're driving up on it. And I go, oh my gosh, is that it? And he goes, yeah. I'm like halfway out the car with my phone camera trying to get video and photos of this thing. but it never crossed my mind that I can't do this. Right. Now, maybe 10 years ago, yes. I would have thought like that. And granted, you can't go 0 to Rockefeller, but you can go 0 to 76 units. I mean, that's what I did, and so it was more of a belief thing. And just figure out what holes you gotta fill. I put 75K of my own money in that first syndication deal. I didn't have the 825 it took to buy that deal. But I figured out where to go find it.
Exactly.
So really that's it. I mean, the self-limiting beliefs is a really big thing. So just get out of your own way. Network like crazy. That's a free fourth one for you. You know that very well. But
network like crazy.
There you go. Fourth for free.
So think big. Don't have limiting beliefs, or remove the limiting beliefs, and network, because your network is your net worth. It's all about who you connect with, people you're learning from. Just hanging out with you the past couple times that I have, Kenny, I've learned so much. I appreciate you so much, all the information you've given. If somebody wanted to learn more about you, somebody wanted to connect with you, learn about more of your deals or anything you're working on, because you got a big plan for the future. And I think anybody who's smart, it's like betting on Tesla before Tesla was a publicly traded stock, right? So what is the easiest way to get in touch with you or learn more about your deals?
So the best way is Wolfe with an e-investments.com. We also have a YouTube channel. We put out a new video every Thursday, kind of a free educational kind of deal to folks, and then find us on Facebook as well.
Excellent. I love that you're doing the free education. After this call, if you can send me over, just text those to me or text them to Darina, and we'll make sure it's on our YouTube channel. We'll make sure it's on the podcast, on the blog, on Facebook. This way we can give anybody who's listening an opportunity to learn more about how they can scale. And instead of buying your silly little 2 families, you could go and buy a 70-unit building right up front. Thank you so much, Kenny. I appreciate you, man. Cheers to your success. When you have a choice, always work with the best.
Thanks.
Thanks, man. Take care.
Yep.